Hey everybody, Mark Yegge. Welcome back to today's Tech Investment Insights. And one of my stock picks for the year is a company called Zscaler. Most people haven't heard of it. Zscaler has recently released its first quarter earnings showing a robust financial performance. Despite a conservative billing outlook, the company's unique cloud security approach and growth trajectory for 2024 remains strong. Imagine navigating the vast ocean of cybersecurity with a refillable compass. That's Zscaler for you. Now, in a second, I'm going to analyze the technical analysis for this stock. In the dynamic world of tech stocks, Zscaler stands out. It has outperformed the S&P 500, showcasing its resilience in the volatile cybersecurity market. Think of Zscaler as a sturdy ship braving the tech market's turbulent waters. Let's delve into the numbers. Zscaler reported a 40% year-over-year revenue growth, with calculated billings and deferred revenue also showing significant increases. These figures aren't just good, they're thunderous announcement of Zscaler's growing dominance in the market. Looking to the horizon, Zscaler's future seems bright. As cloud workloads increase, they're expected to capture a larger share of the cybersecurity market. It's like riding the wave of technological evolution, perfectly poised at the crest. Zscaler's success is not accidental. Its early investments in AI and ML technologies have placed it at the forefront of the expanding cloud security landscape. The company's zero trust architecture is not just a product, it's a testament to their innovative spirit. In terms of valuation, Zscaler might seem expensive, but its growth prospects justify the price. Wall Street's optimism with projected upside of 8 to 9% echoes this sentiment, and investing in Zscaler is like betting on a thoroughbred in a high-stakes race. The potential rewards are substantial. The word on Wall Street is primarily bullish, with a majority of analysts recommending a buy. It reflects confidence in Zscaler's potential. This consensus is like a chorus, harmonizing on the stock's promising future. Zscaler represents a compelling investment opportunity. Its strong performance, innovative products, and positive market outlook make it a wise choice for tech investors. It's an opportunity to be part of a transformative journey in cybersecurity. So that's my little write-up from my blog. Now, let me show you on the chart what the heck I'm talking about. First of all, we have a tight pattern, what's called a tight pattern, that's happening right here around 220. And that means that the institutions are neither buying it or selling it, they're just kind of holding it there. And generally, a tight pattern is a precursor to a breakout. Now, it doesn't always happen, and it also depends on the market, but this has a relative strength rating of 96. And by the way, thanks to MarketSmith for the charts. I don't get anything out of it, but subscribe to MarketSmith because they're awesome. But anyway, it's, this is a stock that's at 221. Let's take a look at the earnings all the way here on the left. Looking at 2023, $1.79, but jumping to 247 this year in 2024, and 2025 going to 298. So they got a nice, solid earnings per share increase, and that leads to an earnings per share growth rate of 74%. I mean, when a company is driving profits at a 74% increase, that's pretty darn good, and that's why stocks go up. Return on equity is 48% with no debt, and return on equity, if it's above 17, 18, 20, something like that, it's awesome. This is 48. Let's take a look at the sales growth. Look at it's all double-digit numbers. Earnings is all triple and double-digit numbers. There's nothing wrong with this stock, and it's supply and demand right now. It's got an up-down volume ratio of 2.0. 1.0 is neutral. 2.0 is really bullish. So there's a lot of buying going on. Look at the last 1, 2, 3, 4, 5, 8 weeks. 8 out of the last 9 weeks, or let's call it 9 out of the last 10 weeks, it looks like, have been up volume ever since numbers. And numbers was 131% earnings per share increase in the quarter. So, when you look at this stock, it doesn't have a technical perfect breakout spot on the chart. It's got this little tight pattern going on at 220. It's got 9 out of 10 weeks of up volume and some good high volume up volume as well in the weeklies. It's building costs to make another base here rather than go back and test the earlier base. That's what I see on the chart. The market is green right now, so that's good. Let's take a look at the daily. Okay, so you can see on the daily, obviously a lot more noise. It goes up and then down. Look at those swing points, 162, 164, 167, 177. And it hasn't quite made an official swing point yet, but I suspect there's going to be a swing point here at 220, something like that. This has got increasing swing points on the upside, and on the downside, it's got a couple of increasing swing points there too, a couple of non-increasing ones, but primarily they're all increasing. So that's telling you that there is volume coming into this stock, and we want to be in a stock that has volume coming into it. I like Zscaler for 2024. I think they're doing a lot of things right. That $400, high price, $375, whatever it is, somewhere in there, that is a long-term target this stock wants to get back to. Right? It wants to prove that it's there. Now it's got to fight all of the selling that's happening on the left side. So that's the problem with when a stock has been sold off so incredibly, like this one went from 380 to 280, right? Like lost 300 points. It's building that back, but all those people didn't sell all the way down. Wish they had sold all the way down as they sat on this dead money. And now as it goes up, those sellers are still there on the left side of the chart. So that's got some work to do on the right side of the chart. But I suspect that if Zscaler continues to do their earnings per share increases and the return on equities that they continue to do, this is a stock that keeps going higher. Keep an eye on it.